And welcome back to No More RIP, No More Residing in Poverty. My name is Ray Williams, and I will be giving you education and information about building personal wealth. Remember, tell your friends and family about the show. Visit on YouTube. Also, you can view us on Roku, YouTube, and other social media channels. The show is No More RIP, No More Residing in Poverty. Okay, first of all, housekeeping. Remember to take advantage of our special offer, which you'll see on the screen. And the reason we're doing this is because each podcast I talk about credit repair scams, because there are lots of them out there. So that's why I encourage you to get your copy of 10 proven strategies for improving credit scores, because a lot of these companies are putting information out there that's inaccurate, misleading. So before you, or if you decide to sign up for a credit repair company, at least know how it works. And that's where they get a lot of people. People don't understand the process of, I don't call it repairing credit, I call it credit management. So all this misleading information about getting your credit scores up in 60 days, 90 days is false. Matter of fact, I saw an advertisement on social media. See, credit score from 564 to 800 in 60 days. Now, once you understand how the credit reporting system works, how they come up with the scores, you will understand that these companies cannot get your credit scores up by 100 points in that short of a period. I've worked in financial industry, particularly mortgage industry, for over 10 years. I've seen lots of credit reports. I've seen people with good credit and bad credit. And the thing is, when I see people that have good credit scores, around 750, most people don't have an 800 score. These are people who have paid their bills on time for years. They maybe purchased automobiles and paid them off, bought another automobile. But there's a process to getting your scores up, not just removing items. So get your copy of 10 proven strategies for increasing credit scores. Go to the website and you can purchase it. Also, while you are on the website, take advantage of some of our free products and free resources that's there. Okay. Remember also, go to annualcreditreport.com and get a free copy of your credit report. Again, that's annualcreditreport.com. That's the official site. And if you want your credit score, you can pay $29 per month, get all 3 credit bureaus and with all 3 credit scores. And there's no contract. You can sign up for it, keep it 1 month, and cancel it. But it's important that you know your credit scores, particularly if you're getting ready to go out and make a purchase. So many people make purchases and they get, or try to get loans, they get disappointed when they get turned down because of their credit. Whereas that's the process should be, know what your credit scores are, know where you stand with your credit before you apply. And also sometimes it's good to know what that particular lender's requirements are, because you don't want to go to a lender that say require a 700 credit score for a personal loan and you have a 600 credit score. So there are various lenders. There's prime and subprime lenders, which I won't go into that. But there are different lenders that cater to different type of consumers. Okay, book of the, recommended book rather, is the Pursuit of Happiness by Chris Garner. Now, some of you may remember the story and the movie that Will Smith played in about Chris Garner, basically how he pursued a career as a trader. But the reason I particularly like or recommend this book, just to show you, or you can learn what people go through to get to certain points. There's a struggle you have to go to, and unfortunately a lot of people don't like to go through the struggle. That's why they look for quick fix. Quick fixes don't work. They work for the people who offer those quick fixes. And I can tell you many stories, quick fix solutions, so-called, that people have tried that don't work. And a lot of times they don't work because they can't make them work. But the objective is to get your money. Now, this show, I will be talking about home ownership and wealth. And the reason for that is that wealth in America, for the most part, is generally created from home ownership. So that's why I always encourage people, whenever you can, buy a home, but don't overpay. A few years ago, when there was supposedly be a housing shortage, people was going out and making offers and paying over the appraised value, which doesn't make sense. But people do it because the problem with that, when you overpay for a property and then the market go reverse and there's a slowdown and the values go down, now you're upside down. And for example, if you go out and purchase a home that's appraised at $300,000 and the asking price is $325,000, you paid $325,000. 3 years later, the market value go back, and the property may appraise at $275,000. So now you're upside down, and that happened to a lot of people during the housing crisis. They got caught with properties that they were upside down, and it's difficult to get out of a upside down property because you owe more than what the property is worth. So know what you're doing when you go out and purchase anything, but particularly homes, because homes is one of the very few ways outside of business, but homes more so than business, is where you can build wealth without a lot of money. So understand real estate, and if you get into real estate, understand real estate investing. But in this show, I will be talking about home ownership. Now, I want to point out some statistics that I pointed out last show, which because they're interesting. Number one, whites earning less than $25,000 per year are likely to have better credit scores than African Americans earning $65,000 to $75,000. So you have one group that earning $25,000, the other group earning up to $75,000. But the first group with $25,000 have better credit scores. Generally, that's because when some people start making more money, they start spending more money. And I used to see that a lot of time in the mortgage industry. People would claim they could afford a property, and I have to counsel them, say, no, you cannot afford it. You may think you can afford the payments, but that's only part of affording the property. So a lot of time people buy on emotions. But I always encourage people to buy what you can afford, not what you want. And too many times people buy what they want opposed to what they can afford. I mean, that's from automobiles, clothing, housing, jewelry, etc. And part of building wealth is about money management, making educated purchases. You're purchasing based on value, not perception. So that's why I do this podcast, because I want to educate people on what it takes to build wealth. Now let's go into the other side of this. I just talked about the credit scores and the incomes. And the study also showed that 27% of Caucasians' credit reports were poor, compared to 48% of African Americans. So 48% of African Americans have poor credit scores. So you put that in, say, perspective with population. You're talking about millions of black people with low credit scores. Even if they're working, they're buying homes, they're buying automobiles, but their credit scores are low because they don't understand what it takes to build credit scores. So, but if you order the publication, 10 proven strategies for increasing credit scores, you will discover what it takes to increase your credit scores. It's not an overnight process, but it can be done over time and education. So, 48%, again, that's a lot of people with low credit scores. Now, what that equates to also when it comes to homes, if you can buy a home with a lower credit score, you end up paying a higher interest rate. So that's what you have to look at. Okay, if I want a home, do I have a high enough credit score to get a reasonable reasonable interest rate? Now the main issue there is higher interest rate means higher payments. Now, if you can afford the higher payment and you really want the home, or you want to buy a home at at a certain time, sometime I would recommend buy the home, but buy with the understanding and the plan of increasing your credit scores, and a couple of years or so later, refinance the property into a lower rate. But that's another lesson, because even if you refinance into a lower rate, you have to run the numbers to see if it's worth it and how long will it take to recoup the refinancing. So if it costs you, say, $8,000 to refinance and you save $200, so it takes X amount of years to break even on what it costs you to refinance. So that's why it's very important to understand financial literacy. As I always say, financial literacy is power. Because when you have that power of knowledge, then guess what? You are saving thousands of dollars. And like I spoke on the last podcast about beating the bank at their own game. And I teach people, and I show my clients all the time how to beat the banks. Once I look at the situation, I show them, hey, this is how you can beat the bank. And it's not difficult. It's, again, about understanding and education. Okay. Black home ownership, the wealth gap. Now, what I'm talking about here is that there's a gap between, and I'll just use African Americans and Caucasians, because since they use Hispanics also, because those are the three largest populations in America. But overall, African Americans, when it comes to home ownership, is at the bottom. And again, a lot of times there's many reasons for that. Sometimes it's lack of education. And what I mean by that, I've actually have people who say they want to buy a home, but they want to wait, or they want to buy a home in a certain area that they really can't afford to live in that area. So in the meantime, they're renting opposed to buying. Example, had someone who wanted to buy a particular home in a particular area. Home was about $400,000. I suggested that this person buy a home about 25 miles outside that area, which was affordable, nice area still, maybe about $325,000, which he at that time could afford it. But he did not want to live in that particular area. He wanted homes in this particular area. Okay, to him that may make sense. But as I told him, how long will it take you to be able to afford that house? And in the meantime, you're losing money because you're renting. You're not getting a tax deduction, which he's in a decent income. He doesn't have any tax write-offs. So now you're paying additional money in taxes, whereas you could be paying on a house somewhere and getting a tax write-off and saving yourself money, and also getting, hopefully, appreciation. Then you do what they call, you step up. You may live there, say, 3 to 5 years, assuming that the property appreciate and you have some equity. Then you sell that property, and now you move up to the next level. But so many people want to start at the top. They don't want to start at the bottom and work their way up. And unfortunately, that's why a lot of African Americans end up missing out on building wealth through home ownership. And give you another example. Years ago, in a certain area of Fort Worth, Texas, homes, it was a lower income area, like a lot of lower income areas, particularly back in the 90s. People didn't want to live there, even though the homes were very affordable. But people would come up with excuses. It's a bad area, it's this, it's that. And I would always educate them, well, all the area is not bad. You don't have to live there all your life. Get there, get in something at a reasonable price, and then you move up. And at that time, you could actually buy homes in that area. They weren't new homes; they were older homes. But a lot of sectors of the communities were nice areas. They wasn't crime ridden all over. But if you got in those homes at that time, say a home that needed no rehab, you could get maybe about 45 to 65,000. 7 or 8 years later, those homes are going for about 80,000. So assuming that you stayed there at least, say, around that time, maybe 8 years, property values doubled. So now you could have sold that home and pocketed, let's just say let's use a round number, say 50,000. Then you take that 50,000, a part of it, say 30,000, and you go out to another area. At that time, you could have bought a nice home for about 95,000. So you go out and you would have put that money, 30,000 down on a $90,000 home. Now you have a $90,000 home with 30,000 equity because you put the down, and assuming you purchased it with, say, let's just use the example, 10,000 equity. Now you have $40,000 in equity, and you have a payment, affordable payment, depends on your income. So it's a stair step, as they call it. So you can stair step your way up the ladder. But so many people keep themselves out of the wealth transitions because they stabilize themselves in apartments or certain mindsets even. So understand how real estate work, because most people that have real estate are people who become wealthy if they use it properly. And what I mean by using your real estate properly, that means you buy a property and you, like I said, you move up the ladder. And then if you really want to build your wealth, that first property that you bought, you keep that property as a rental property. Now you have two properties. So real estate is the way to go. I suggested someone the other day. He and his brother both have families, and they're looking at buying a home. But at this point, they want to wait. Same thing. They want to wait and until they get to a certain point, which is okay. But my advice or recommendation was, okay, why don't you both go together? They both have decent paying jobs, and their wives both work. Why don't you go and try to find a fourplex, and you both go in and buy a fourplex? Because now, as I always remind people, a fourplex is the same as buying a single family home. So if they go out and buy a fourplex, so now they have 4 units, and they each live in 1 unit, and they rent the other 2 units out. They would start building their real estate portfolio. Assume they stay there 3 to 5 years, and then they each buy their own single family home. So now they own a fourplex, plus they have each have a single family home. So that's how you can stair step your way up to building wealth. But when you're sitting back and renting, and then you're justifying why you rent opposed to buying. Now, this is funny. I've seen people and heard people talk about homes are not expensive, but it's better to rent. Well, in some cases, it's better to rent. Naturally, if you cannot afford a place to buy, it's better to rent. So therefore, you rent. But assuming that you are a person who's progressive, have stable employment, your focus should be on buying as soon as possible and buy what you can afford. And let's say, for example, if you are paying, let's say for a 2-bedroom, nice area, let's say you're paying about, in this area, Dallas-Fort Worth area, say about $1,400 to $1,500 per month. And assuming that you save your money up and you buy a reasonable property and your payment is $18,000. Okay, it's a few $100 more, but yet you have something that you can build on. Opposed to renting, you get nothing from paying the rent. Your landlords get the tax write-off. Your landlords get the tax write-off for maintenance, even though they charge you for maintenance, which some people don't understand, because they say, well, I don't have to repair this, I don't have to pay for repairs. But the reality is, renters always pay for repairs. The investors calculate maintenance into the rent. So don't think they're renting that place and paying for the repairs. They have that calculated per unit. So if they own a 80-unit apartment complex, they have 80 people. They're collecting money, say let's just say 10% of the rents go towards future maintenance. So the tenants are paying for that future maintenance. Now, a lot of cases, most of the tenants may not need, or if they do need some maintenance, it may be minor maintenance, nothing major. So, but still, the tenants are paying for the maintenance. The owners, the investors, have to pay property tax. No, the owners pay the tenants pay property tax. The tenants pay for the insurance. So tenants pay for everything. So to try to justify that you don't want to own a home because it's you don't have to do certain things, it's not true. You pay for it. It's all calculated in the rent. And so that you may understand it better, look at it this way. When you're renting, on average, investors don't rent just to rent. They rent to make money. They make money two ways. Some will say maybe three ways. One is cash flow, which means they make money after their payments. So let's just round some numbers off, and let's just say, take one unit. Let's say their payment on one unit is $1,000, but they're charging you rent of $1,400. And let's say out of that $1,400, they cash flow $200, and the other $200 go towards property tax, insurance, etc. So cash flow, they make money off of. They make money off appreciation. So value go up, they're making money. They make money off of depreciation, which they get to depreciate the value of the property for tax write-offs. So they're making money off their unit. You're paying for them to make that money. They're not doing this for free. Now think about it. Why are there so many apartment complexes going up in almost any areas? It's because it's big money. That's what you have to think of. Why should you pay for them to make all the money when you can be making money through your own investment in real estate? The show is No More Rip. My name is Ray Williams.
Yeah.
Visit the website.
CEO Ray Williams. No more RIP. We rise.
No more living in poverty.
We break chains, now we winning properly.
Stand tall, build wealth for the family.
Ray Williams showing love to the community. No more RIP.
Rising power.
Rising power. From the struggle to the lights, now we elevate. Turn pain into power, yeah, we celebrate. No more dreams dying in these cold streets. We inspire every soul when the beat speaks.
Stand tall.
Stand tall.
Stand tall.
Stand tall.
No more living in poverty.
We break chains, now we winning properly.
Stand tall, build wealth for the family.
Ray Williams showing love to the community. No more RIP.
Rising
Hey.
power.
Rising power. No more RIP.
Rising
Rising power. Ray Williams. Let's go.